Well, first of all, thank you for inviting me again in this very distinguished conference. I mean, there's no doubt, and maybe you've discussed this in the last couple of days, that the macro environment is in transition, to say the least. You look at the economy today, the expectation is, overall, I would say the consensus that there's not going to be a recession next year. You guys at the Economist are closer to it to judge if this is the case, but everybody is saying that probably we have avoided recession so far. When you look at inflation, of course, it's easing, but it's not still at the target. And these geopolitical events that you were talking earlier on at the panel naturally are impacting inflationary pressures. And then you had the interest rates, which certainly have impacted, I would say, the most at this stage on where we are at. And that means, and again, the consensus is that interest rates are going to stay higher for longer. And as investors, we need to adjust to this and expect on what will happen with interest rates staying higher for longer. Now, there is always a lag in the economy, and we've seen it, that there is a lag between how the macro effects happen, what the geopolitical effects happen, and what impact this has on the real economy, and of course about investing itself. The truth is that in this environment, pricing risk is difficult. It's challenging. I think when we look at any investments we make in this environment, naturally, we need to be more cautious. We are expecting that valuations are going to come down. We are expecting that multiples are going to come down. And it's natural, partly because it's mathematical. You know, when interest rates go up, valuations will come down. But also because the conservative nature and the uncertainty that this environment presents means that we'll have to be more conservative when we assume what we'll exit at. So a lot of what we're doing as a firm, but I suspect a lot of our peers, is focusing back on the fundamentals, looking at buying good businesses and making sure we're buying businesses where we can add value, we can create value, and be much more hands-on investors. So I think you will see us as investors going back to the basics, looking at fundamentals. Don't expect that we will see valuations increasing substantially in the short term, and try to price risk in this environment.